So the really big news that we have to share in today's episode is really about the fact that on September 17th of 2025, depending on when you are watching this video, but probably likely 1 to 2 weeks from the release of this video, the big idea is that the Federal Reserve has now officially come out to announce plans that they will officially now be cutting interest rates for the first time in a long time. So not the first time in life, but the first time after many months of stalling, they will now officially be cutting interest rates on September 17th of 2025. So if you are watching this before that date, then the great news is that you are now prepared for what's potentially going to come on that specific date. But even if you're watching this ahead in front of, let's say you're watching this after September 17th, I still do think this might be a great video to watch, because a lot of the things are going to be that we're going to be talking about in today's video is going to be related to the economy, and you can see whether or not a lot of the information in this video aged well or maybe didn't age very well, depending on what ultimately ends up happening. Because the idea really is that as at the time of the making of this video, there are plans from so many different resources, outlets, speeches, articles, that talk about how the Federal Reserve is now in support of cutting interest rates on that specific date. But the idea is that obviously because the future has not happened yet, and there are so many times when the Federal Reserve will announce a particular something, but then ends up going back and then doing a particular something else, is why we don't know for sure whether or not interest rates are going to be cut. But according to many resources, there is over 80% chance that they will be cutting interest rates on that date. And so the idea is that when they do officially cut interest rates, whether or not that happens on that date or that happens in the future or on another date, the big idea is that eventually when it does happen, a lot of areas of our economy are going to be impacted. This is definitely going to have a massive impact on things such as like our job market, our labor market, certainly the housing market. A lot of different things that are going on in our economy. Inflation obviously is going to be very massively impacted, but all of this stuff we are going to cover and talk about in today's episode. So with that being said, let's just get right to this video. But as always, if you guys enjoy videos like this, like, comment, subscribe. If you guys want to share support, it is always greatly appreciated. But with that being said, let's get started. So the story to what's happening right now in our country and our economy is that there are a lot of people right now that are in support of cutting interest rates. And then there's also, interestingly, a population of people that are actually against cutting interest rates. So there's really two sides to the argument that we're going to talk about, the pros and cons, so definitely listen through. But the idea really is that we're going to start by talking a little bit about the people that are really in favor of supporting the cutting interest rates. And I think the real idea and the reasoning why is that because when you look around a lot of news articles, outlets, when you listen to what Jerome Powell has said, when you listen to Donald Trump, President Donald Trump, when you listen to a lot of our major figures, there are probably more people right now at this time that are actually in support of cutting interest rates than people against it. But at the same time, I think it's still really important to understand both sides, because there's a story to both sides, both a pros and a cons list to why they should or should not cut interest rates. But to start with a little bit of the support for why they should cut interest rates is that there are several motivations or reasons why they're looking to cut interest rates. The first one really has to do with the labor market and the job market that we really have to talk about. So this is especially relevant if you are someone that's looking for a job right now, or if you are someone that's maybe currently employed, but you're looking for new opportunities to build up your career in whatever you're currently doing for work and for a living. The idea really is that the job market and the job report recently did come out about a few weeks ago, and we did already make a video dedicated to talking about the labor market, so I highly recommend checking that video out. I believe the name of that video is literally just called Last Jobs Report, and I'll put it at the end screen so you can watch it after this video as well. But the summary of what you have to know if you haven't seen that video is that the jobs report did come out, and the long story short is that it was very bad. It was really rough. Just objectively speaking, these are all numbers. The idea really is that they significantly underperformed. I believe in total they were only able to add 73,000 jobs. And if you need some kind of basis for comparison, during healthy times, they're able to add about 200,000 to 300,000 jobs. That typically is considered a healthy amount. But in this situation, they were only able to add 73,000 jobs. And the worst part is that because every single month, they end up revising these numbers. So it is expected that when they revise it again for the next month, so coming into late September or even into October of 2025, when they revise those numbers, it might end up becoming revised to something even worse than 73,000. So the bottom line, what you have to know is that the jobs report was just, long story short, really, really rough and just was really, really underperforming. But it's because it was very, very underperforming, the goal right now is, in order to help fix and stimulate the economy, they're debating on cutting the interest rates. And that's one of the motivation behind it. And you might be wondering what the logic is behind this. Is to simply put it in simplified terms is that if they decide to cut interest rates, it will make borrowing money a lot easier. If it becomes easier to borrow money, what ultimately happens is that it'll help to stimulate the economy. And if the economy becomes stimulated, hopefully it'll cause businesses to do better. And if businesses ultimately do better, hopefully they can continue hiring again. And that's how they're going to keep the job market rolling. So that's really the logic behind this one. But the second thing that we really have to talk about in terms of the arguments in favor of why they should cut interest rates is really also the second reason has to do with the debt crisis. So what is the story behind this one is essentially is that right now, as you probably know if you've been following this channel for a while, and if you guys haven't, maybe consider subscribing if you guys are brand new here. It's always great to see new familiar faces, and feel free to leave a comment if you want to. But the idea really is that because our country, as you probably know, is in a lot of debt. And it's because our country is in a lot of debt, cutting interest rates and decreasing it is going to make it a lot easier to borrow money, but it also means that it's going to be a lot easier to pay off the debt or to pay off the fees for already existing borrowed money. In other words, the bottom line is that you borrow money, you need to pay interest, and if you decide to decrease the interest rates, then less money has to be owed. And that's really the logic behind it. So it's going to help control the debt crisis and situation that our country is currently going through right now. And I think that's the really big motivation behind it. So that's just a simple, sweet, to put it, way to talk about the second point. But moving on to the third point that we have to talk about in terms of the support for why they should cut interest rates is going to be everything related to the housing market. Now, this one's very, very important is because right now, as we probably know, and feel free to share your comments down below if you guys have any thoughts about this, but you probably know about how the fact that home affordability right now, it's absurd. It is very, very expensive, especially if you live in a major city. For example, I'm currently based out of New York City. If you live in any kind of major city, home affordability is just out of reach right now. For a lot of people, we cannot even talk about buying a home because of how insanely, incredibly expensive home buying has now officially gotten. But the hope is that if they eventually decide to maybe cut interest rates, maybe it's going to make it so that it becomes a lot easier to borrow money. And if it becomes a lot easier to borrow money, it's also going to be a lot easier to take out a loan, or in this case, to take out a mortgage in order to afford and buy homes again. So because right now at this time we are going through a home affordability crisis, the hope is that by cutting interest rates, hopefully this is going to help to stimulate the economy and make it just a little bit easier, not necessarily to afford the home, because again, homes are still going to be very expensive, but certainly at least to be able to borrow the money needed to afford the home. So you still have to make up the money from somewhere, but at least it'll hopefully be a little bit easier to manage if it becomes easier to borrow that money to be able to pay off a lot of the loans and the debt and the mortgage to be able to buy these homes, or just honestly just any big purchase in general. But moving on to the next thing that we have to now talk about, which is really going to be taking a look at the other side, which is really about arguments for why they should not cut interest rates. So right now at this time, the overwhelming majority of people are in support of cutting interest rates. But I would probably say is that there are not a lot of reasons to not cut interest rates, but the reasons to not cut interest rates are very, very heavy in the sense that there's a lot of weight to the reasonings why someone should maybe hesitate or be a little bit cautious about cutting interest rates. But probably the number one argument for why they should maybe reconsider if they are going to cut interest rates, the argument on the other side, has to do with everything related to the big, big word that we have talked so much on this channel about, which is going to be inflation. The long story short is that if they end up deciding to cut interest rates, yes, it is expected that inflation might potentially worsen our economy even further. And the logic behind this one is basically just the reverse of what we've talked about in this channel, is that for the last several years up until the Fed pivot happened, they were basically increasing interest rates rapidly in order to control inflation. But if they decide to now start to decrease interest rates, hence the Fed pivot because they're pivoting, what they're doing. What this is going to happen is that it is expected that it's going to take inflation to even higher levels. And so we have to talk next about a little bit about what we can do to combat this inflation and do with our money, because this is going to be very, very important. But the big argument why they're against, some people are against cutting interest rates, is that because if they ultimately end up cutting interest rates, it is going to drive prices even higher than what they already are currently at right now. And we already know right now, and this is something that you don't even have to read from a news article. If you've just been living life in America, living in our country, you probably have already experienced this when you go shopping, when you buy food, when you buy goods, if you're a small business owner, when you buy the expenses that are needed to keep a business running. All of these things, the expenses, the tariffs, inflation, it's getting worse. And I think that it's fair to say that if they end up cutting interest rates, if they end up doing that, what's going to end up happening is it's going to drive inflation even to new levels that we have never even seen before. So the economy is expected to get better in some ways, which we've already talked about, but it is also sadly expected to worsen even further in other ways, depending on depending on the angle that you're currently looking at this specific situation. But I think that that's probably going to be the big argument for why they should consider supporting cutting interest rates, but also the argument to why they should maybe be against cutting interest rates. But the final thing that I really want to talk about in today's video before we wrap up is going to be about what we should do to combat and deal with all of this stuff that's happening. And I would probably say that if there's any advice to really give about how we can combat and protect our money and the weight and value of everything, is that it's because of everything that's going on in our country right now, it is going to be even more important than ever that we have to start to really consider investing our money. Because if inflation really skyrockets to even higher levels like it is expected to right now, it means that the weight of every single dollar is going to go down. Things are going to get even more expensive, even faster than people expected. Would not even be shocked if it comes to a point where in the near future, we are now dropping like $40, $50 just for a dinner for one person. A dinner for one person. I mean, it already is, depending on obviously the quality of the restaurant, but I mean like average, the typical cost of a dinner out in like a non-fancy restaurant. Things are gonna be a lot more expensive. So it becomes even more important that we have to invest our money, because by investing our money, the stock market and a lot of the assets and the prices of things are expected to also go up with it. So the good news, maybe one good thing, bright news to share in light of everything that's happening, is that if inflation really gets taken to a new level, while it is true that things are going to get a lot more expensive, asset prices, so investments, stocks, real estate, gold, everything is also expected to go up with it as well. But if you just hold on to cash, the value of the dollar is not going to go up. The value of the dollar is going to go down, but the value of our assets is going to go up. So it becomes even more important than ever that we have to start to really think about trying to invest our money. Now, I know and I'm completely aware that there's a lot of people right now that might be living paycheck to paycheck. I was living paycheck to paycheck for many, many years during my early 20s especially. So the idea is that there are going to be a lot of people that might struggle to find the money needed to invest. But if you have that ability to invest, if you have spare money around to do so, definitely the biggest advice is it's so important to learn to invest and actually physically take that money and now start to put it into stocks, to assets, to real estate, to gold, to whatever kind of investment opportunity that you see out there. Definitely take advantage of that. And also remember to pay off your debt, because if interest rates do go down, it becomes more important than ever to pay off debt before things accumulate. But with that being said, that's pretty much most of what I wanted to cover in today's video. So if you guys hopefully found that relatively insightful, maybe like, comment, subscribe if you guys haven't done so. We will be making more videos about this topic as news comes on. So we don't make videos all the time, but when news actually does happen, we will be sure to share them. So with that being said, thank you guys so much for watching. As always, stay safe, stay well, and hope to see you guys next time. Thank you guys so much again.